Hello and welcome to Pro Trader Strategies Market Commentary for Friday, August the 25th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, Jackson Hole Symposium going on today and into the weekend. Janet Yellen, probably the highlight of that so far with her speech this morning. Really not a whole lot coming out of it. Just basically saying that all of the regulations and everything else that have been enacted since 2008 are actually working the way that they want them to, and that they are in line with what they want to do with the interest rates for all intents and purposes. Anyway, here in the United States, not a whole lot going on across the pond in form of economic data besides German GDP came in line with expectations at 0.6%. But here in the United States, we got core durable goods orders, and it came in at 0.5%, was expected to be 0.4%, so just a notch higher than expected there. And remember, core durable goods orders strips out automotive and transportation, things of that nature that might be a little bit more volatile. So when that is taken out of the number, it came in line with expectations. But if you add back in those automotives, came in at a negative 6.8%, was expected to be a negative 6%. So a lot worse than expected there, almost a full percentage point. Not really great for the automotive and transportation sector. So keep your eyes out for that. There might be some weakness going on, and they're just off of that economic data point. All right, then on to crude oil. With that weak economic data point on automotives, I would think that we might see a little bit of kink in the armor of crude oil. Not necessarily so right now, up about 30 cents. Inside day after yesterday's big sell-off, we did break below that 50 Fibonacci level that I was been talking about so much. Couldn't settle there, so a win for the bulls in a sense. Basically made that just a bar that engulfed in a sense, or it just retraced the previous day's rally. So big move up previous day on Wednesday. Thursday we get that sell-off. Today pretty much an inside day, but again, not out of the woods on this with crude oil if there's issues with the transportation sector. Gold having a wild ride today, mostly during the Janet Yellen speech for the most part. That's really kind of the catalyst there. It's up about $3.50 right now for the most part, but can't get above this value area high and stay there. It just keeps bouncing up there the last week and a half or so. Can't get through there and settle above that, which would be what the bulls are trying to do here. This area, which is where the value area high is, I've talked about many times, is a very big resistance area. As you can see, we had tweezer tops there, creating another top. Again, just really a big resistance area right here at the levels we're at. We could call it 1300 is where the bulls want to get through. The bears are really defending. Then on to bonds. Not a whole lot to see here. Inside day from yesterday, it's again similar to gold, trading up against the value area high. But after Janet Yellen's speech today, interest rates are not going to move in either direction anytime soon. So bonds really just don't have any place to go. They're just going to be wandering around in a pretty tight range, I would foresee, unless we see something catastrophic happen in the overall global sense of the economic picture. Then VIX coming off today. Yesterday had bouncing around, but today VIX down just a little bit. not a whole lot to see there, but I've been showing that chart for a little while. We've got Dow Jones Industrial Average up about 40 points, but pretty quiet day. Rush to the Hamptons until basically we get to Labor Day. We're going to probably see quiet markets on these Fridays as the summer markets continue. Fridays have a tendency to be even worse volume-wise than any other day. NASDAQ down slightly on the day. After yesterday, we got that nice rally at the end of the day. NASDAQ off just a little bit, whereas E-mini S&Ps, as you can see here, are in slightly positive territory, up about 2 points here. So mixed bag on the equity side. So the overall markets really rallied up overnight, but as soon as the market opened in the day session, we got those durable goods orders. I think the core durable goods orders, which look good, people kind of shied away when they saw the transportation aspect added back into that number. Just probably getting a few people a little bit weary about the whole robustness of the economy. All right, on to XLK. This is a trade that I ended up covering. I talked about it yesterday. I was trying to get out of it. Today it worked out quite nicely to get out of this. As a matter of fact, it was up a little bit higher this morning when the NASDAQ was pushing up, but was able to get out of this for 50% of my max profit. And I had on the September 55 puts that originally sold for 34 cents, bought them back for 17 today. So that trade I am out of. I still have on the other side of that trade. Remember, I had on two trades in there. I had on the SEP 55 puts, and then I added to it with the SEP 56 puts a little bit later on. So 56 puts aren't quite 50% of the max profit. They're getting relatively close, but at the end of the day, I'm probably about a dime away on those 56 puts in order to achieve 50% of my max profit. All right, XRT is another trade that I'm looking to get out of. It's not looking so great right now, but I figured I'd throw in that order just in case, because I am about a nickel away on that. And I have on the September 38 puts in there. Originally sold those for about 60, I think it was 66 cents, and I'm trying to get out for 33, so right at 50% of my max profit. And they are trading right around 39 right now. So close, but yesterday's sell-off kind of bunked that one. I thought I was going to do all right yesterday. I was trying to get out of that, but it got a little away from me late in the day as the retail sector came off. Most of it having to do with Amazon talking about they are going through with the Whole Foods buy, and they're going to lower their prices on food, which really hurt Target, Walmart, Costco, and many of the other grocers. Were really hurt by the fact that Amazon is going to lower prices on Whole Foods. Now, that was kind of the nice thing with this whole deal, was people thought, well, Whole Foods really isn't going to compete with Walmart because their prices are so much higher. Well, now with that being baked into the cake, I should say, that is looking to hurt Walmart and the rest of the grocers in a sense. Walmart not really considered a grocer necessarily, but they're really ramping up that with their buy online and pick up delivery kind of thing. One thing that might be hurting Amazon is Trump is talking about taxing Amazon on the state level as well, which they should. The fact of the matter is Amazon shouldn't be benefited with these having people buy from Amazon and not being taxed on it, just like if you were go to your local grocer or retailer for that matter. At the end of the day, there shouldn't be different standards for those different companies as far as I'm concerned. So I think that Amazon should be taxed just like any other business. But that's my soapbox. And today's webinar is going to be on the put diagonal, so check that out. I'm going to show you how to increase your probabilities of success with that. Basically paying for extrinsic value. It's perfect because right now one thing we're getting out of earnings season, and I didn't do anything with ULTA yesterday. I was actually preparing for this webinar, and time got away from me, and I missed out on that trade, luckily, because I was going to play that to the upside, and it is down. was going to be well outside of that, so I think I would have done all right on that trade. But at the end of the day, I forgot to place it, and I was getting ready for this put diagonal webinar, and all of a sudden the bell went off, so I missed out on that trade. But it's going to be a really good one, so check that out. Go to protraderstrategies.com, sign up for that, and that's all I got for you. If you can't take that, take it easy. One more.